All right, what is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin and the crypto markets. Welcome in, everybody. I hope you guys had a good holiday weekend, extended weekend, if you guys did celebrate that. Stefan Dinges, thank you so much for the support, man. Yes, guys, please hit the like button on your way in, or if you do get any insight into the market from this live stream, please hit the like button for me. Samuel S., cheers to you, man. Thank you so much for being here, and thank you for modding as always. Mr. Wreckage-Shun, what's up, man? Yeah, Pitchfork Degen. And actually, I want to go into a couple pitchforks with you that are very, very important. We are breaking down from both our bullish pitchforks. This is our more regional bullish pitchfork pulled from the major swing highs and swing lows of this range, breaking it down last week, back testing it, getting that rejection at 78K on the back test of that pitchfork. And now seeing after backtesting the more bullish pitchfork and getting a rejection, what is happening is we are losing the base of our very first pitchfork in this entire trend, meaning, guys, we could see more downside coming in. We are finally losing this trend support, trend-based support that we have been in for the past couple of months. But I'll go into that a little bit more in depth. I'm going to go into what happened today. I did post in the Telegram. If we lose the highs, you can take an SFP short. I did end up taking a short. I got in a little bit late on that. I had a very, very busy morning with other things going on in my life. But guys, a couple things here. Let me just continue saying hi to everyone. Arcadius, Choena, welcome in. Hello to you as well. Crypto Clan World, what's up, man? So good to see you in here as always. Lil Rick 69, what's up? No, what's up to you guys? Thank you guys for being here. Crypto Wander 5813. Thank you so much for the support. Please do hit the like button, guys. Sergio Angel, price right at the 4-hour golden pocket. Yes, so we're coming up to our golden pocket, but I also want to explain there is a support level just below the golden pocket that I'm really liking. So maybe a wick through this golden pocket into a support level. Actually, we have a fresh daily level at $75,500 or 75,447, let's say. And let me get rid of this one. This shouldn't be there. And then we also have a naked daily point of control at 75,400. And then you can see our anchored VWAP is coming up into that point. So right below our golden pocket, very nice volume and time frame support. So maybe we're going to see a little bit of a wick down there, bounce it, reclaim the golden pocket. And then I would be expecting new lows to be coming in. I'll explain that very soon, guys. But nice support locally. So if we hit that, guys, let's actually set an alert right now on this daily level. And if we get that during the stream, we can look for some local bull divs in order to take a long position. But I am going to be a little bit more cautious with the long position here because of the way we are losing our more macro support levels. And I want to go into that in just a second. So let me go ahead and hide this local golden pocket. Archie TV Live, what's up, man? So good to see you in here. Drumhop TV, thank you so much for smashing the like button and for the support. Middle school kid, we're cooked until 2027. Man, I just, for the longest time in this range for 3 months, I was saying that it's more probable to be a corrective range. By the way, at that $82,000 resistance, 82.3, 82.5, I was warning you guys this was a major, major resistance where we could get new lows below 60K. It was our logarithmic golden pocket from 98K all the way down to 60K. It was also our one-to-one trend-based Fibonacci extinction target. And this was a major zone where we could see a more macro pullback on Bitcoin or potentially even new lows below 60K. So yeah, I've been expecting this in some ways. What we could be looking at from that high at 82K is an impulse to the downside, right? 1, 2, 1, 2. You got your 3, a 4, 5, and now are we going to see a 4, a 5, another 4, and another 5? Meaning that the long at the daily level at 75.4 would only be a scalp long to take up to a local lower high golden pocket before continuing the second fifth wave impulse to the downside. I'll go into that just in a second. Patrick Schooner, welcome in. Fat Sonic, welcome in, man. I went long YLFI today for shits and giggles and got smashed. Yeah, a lot of altcoins are coming into some major resistances as well. I want to talk about NEAR. I want to talk about ZEC. I want to talk about a few of the different altcoins, and you guys can also post some altcoins in the chat. Dylan, Wadia, it's Finally, time for the Emerald. Go down we go. Yeah, Dylan, welcome in. Time Attack, much love to you. Thank you so much for being here. Thank you for modding. Steel and Stone, good to see you as well. Chi-chan, much love to you. We think we're going to bounce from here. Well, I'm looking for a scalp long from that daily level, 75.5-ish, let's say, 75.4, 75.5. But I will go into the specifics of that because, once again, it will be a scalp long position. I am expecting that we could make new lows below that 74.4K low that we saw. Let me go into really quickly. So guys, in this upper range here, we had a channel. We had a descending channel, and the bulls really needed to hold that channel and break to the upside in order to see the overall continuation of this impulse happen. When we broke that descending channel down, not that one, this guy here, what we saw was an immediate, after we broke it to the downside, we saw an immediate low time frame backtest, rejected, we made new lows, taking out these lows. That's what you expected. Then we saw a higher time frame backtest of the channel, but if you look very closely, we had front run actually touching the channel because we had a naked daily point of control at $78,000. Now, I took that short as well. You guys remember that. I told you guys the second it was happening live that I was taking the short from the naked daily. It was also a 786 Fibonacci retrace in this purple box. I took a TP1 after taking out these lows, and then I completely closed the trade once we reclaimed $74,900. So very nice scalp short trade or day trade short trade. I was long from 74.9 once we reclaimed 74.9, and as soon as we started dumping in here, I closed out 50% of the position, and I still have that open, but if we do not bounce from the golden pocket, I'm going to be closing that out, or from that naked daily point of control, 75.4. But the key thing here, guys, is we lost this channel. So our momentum to the upside kind of was due for a bigger pullback. We were saying, okay, due for a bigger pullback. It's highly likely we come take out the liquidity at 74.8, 74.9. That was also the back test of our value area high of the past 3 months. We got a nice bounce from there, a nice reaction from there. We were able to reclaim the anchored VWAP. But the move up that we wanted to see an impulse here, an impulse, and we wanted to break above our 78K highs, finally breaking some market structure bullishly on some of the intermediate timeframes. Well, what we saw from the low is, could we count this as an impulse? Well, this looks impulsive. We have a 3-wave corrective move, a flat sort of. This doesn't, could this be some sort of contracting diagonal? Well, it's not really contracting. It's more of an expanding diagonal, which is even less probability than a contracting diagonal. So it's very hard for me to count this entire move up from the Friday lows up to today's highs as an impulsive structure. It does look more corrective. What also did we do today, guys? Over the weekend, we know yesterday was a holiday because of Memorial Day, a bank holiday. Banks were not open. So we had a weekend high, what is essentially a weekend high. We had a new naked daily point of control at 78K, still the same naked daily point of control. It was new until today. I'll show you that right now. And we did have the back test of the channel once again. You can see that this naked daily point of control was good until just hitting it today. So now I can delete that, but I left it on the chart to show you guys why we're rejecting where we're rejecting. We got the SFP into the back test of the channel, into the naked daily point of control, not taking out the highs, seeing a lower high just barely, but it is a lower high, continuing to maintain bearish market structure, and we are dumping aggressively what looks to be an impulsive move to the downside. Another thing, we finally hit the back test of the channel. We front ran the back test here on a higher time frame. So now what we could be looking at is within these channels that develop 1, 2, 1, 2, you get your big third wave down, and now we could be looking for that chop again in the 4 and 5s, the 4s and 5s. Because we have 2 1 2s, we're going to need now 2 4 5s in here. The big thing is, if we get reaccepted back within our 3-month volume profile, it is going to be macro bearish for Bitcoin. Let me zoom out here onto the 4-hour chart, and we can just throw that volume profile on the chart real quick. If we get accepted back inside of this volume profile, which you can see right now, we're still above it. And by the way, where is the value area high, guys? It's right on top of our naked daily point of control. It's right on top of our daily level. So to me, the golden pocket coming up is a level to be watching, but I would actually prefer to wick through that golden pocket just barely to hit the naked daily point of control in the daily level. And then once we start to bounce from there and reclaim the golden pocket, we could look for a long opportunity. You can see naked daily point of control, daily level, value area high of the range, anchored VWAP from 66K, and your local golden pocket. Now, because we are still looking at the potential of a double 1-2 impulse, 1-2, 1-2, 3, 4, 5, 4, 5, we are expected to take out that low from last Friday. But in that low being taken out, we're looking for an impulse to the downside. So this, now we're zooming in a little bit more. Let me go ahead and hide this here. We're looking at the high, the rejection from today, the rejection of today's highs. And what we want to see on this move to the downside is a 5-wave impulse, taking out the lows from last Friday. So do we see this as a wave 1 that brings us to 75.4? We get a pullback in a wave 2, could bring us all the way up to the POC of this sideways range, which we'll pull that in just a second here. We can pull this sideways range. POC is going to be around 76.7. If we look at a theoretical golden pocket, I'm just going to put it right on top of the value area high. All right, I guess it's a little bit higher than that POC, but I would be looking around POC golden pocket for a potential wave 2. So we have our wave 1 down, a wave 2, and then I would be expecting our wave 3 potentially to take out that low, see a small retrace in an SFP, a scalp SFP, before seeing a 5th and final wave, giving us our final 5th wave to the downside, which would complete this entire impulse from $82,800. Now, the scary part with that, guys, is that we will be getting reacceptance back within our macro 3-month-long range. Now, after an impulse finishes, after a bigger time frame impulse finishes, the impulse that we're seeing right now, the double 1-2 impulse on the charts. Okay, what's going on here? Let me get that. All right, here we go. So after we see this new low, we could be looking at seeing a bigger retracement to the upside. Let me hide that. Let me get rid of that. And let me hide the channel. Oh, another thing with the channels, let me go into this real quick. With the channels, we're breaking our smaller time frame channel down, but if you guys remember, we've been paying attention to our macro channel. This channel here is pulled from the 60K lows to your 66K higher lows up to your very first initial dead cat bounce high. We wanted to hold the midline of this channel. Well, what did we do over the past week? We saw a small bounce from 76,000 that gave us a move up to 78,000. We lost the channel over last week. This entire weekend, we back tested that channel 3 separate times, and now we're losing it and flipping it into resistance. So this channel midline flipping into resistance means that we could see a move to the bottom of the channel. If you lose the bottom of the channel, you're in serious trouble to come take the lows at 60K. What we need to be looking at is this entire impulse down, 1-2, 1-2, 3, 4, 5, 4, 5. Let's say that we see a bounce somewhere in this zone for our 5th and final wave of this impulse to the downside. Well, the scary part is we would be finding reacceptance back within the range. Also, this could be just the wave 1. We could get a retrace up to golden pocket for a wave 2, a wave 3, 4, 5. You know, probably this wave 3 is going to go a lot lower, probably going to come down to 64K. And then we would be flipping something like this into resistance, and we would be seeing that 5-wave impulse come in over the next few months to take out your 60K lows. 58K, 56K, 58 to 56K is the big zone that I'm looking at. So we really have to be aware, even if we get some bounces, some local bounces to the upside, depending on what, if CJ is in here, CJ asked me if I think 60K is still probable to take out when we were rejecting a few weeks ago up here. And I remember I told everyone on the live stream, the first initial move down will tell us everything. Because if the first initial move down is corrective, even if it's a complex correction that comes down to 75K, then we do have likelihood to continue up to break to new highs. But if the first move down is an impulsive structure to the downside, that is a very bad sign, and then we could get a move up and then another big potential, a greater potential to take out our 60K lows. And so far, that's what looks like is happening. And Also, guys, I talked about how the last month, how the 60K low is not a good macro low, that we've been rising in this ascending channel with lower and lower and lower volume on the daily time frame, being a sign of a corrective move on the daily time frame before taking out the lows. And then also rejecting just from some key resistances, right? If you pull a 1-to-1 trend-based Fibonacci extinction from the low at 60K to the high at 76K to the higher low at 65K, our 1-to-1 trend-based Fibonacci extinction, we rejected straight from our ABC target. Looking at the contracting diagonal in an A wave, three-wave pullback in a B wave, and then multiple 1-2 impulse in a C wave. Now that that is done, now that we're rejecting from our macro resistance, very, very key resistance, this needed to start out as a corrective move in order for us to have high likelihood to continue up. So far, it's looking more impulsive to the downside. I'm going to delete this naked daily. That's where we rejected today. Now, as far as scalp trades go, guys, we can still have a higher time frame bias of more downside, but still be chasing longs. We can still be looking for long entries. I took the long on the reclaim of $74,900. I took the short this morning on the SFP. I was a little bit late, but I took the short on that SFP and rejection from the naked daily point of control. Also the rejection from our channel midline and the rejection from the smaller channel bearish backtest, right? So coming up very, very locally, we know that we just had an extended weekend with a holiday. We do know that we have some levels of support below us. If we look at that local golden pocket, not that one. Sorry, guys. There we go. It's coming in around 75,650 to 75, let's just say 550. Just below that is even better support to me. If we look at, once again, the entire 3-month long range on Coinbase, and we pull that volume profile, value area high, back test, another bullish back test, the value area high, 75,415, let's say. Daily level, fresh daily level coming in at 75,447, right on top of that value area high. And then our naked daily point of control, 75,400. So right in this zone is a really nice support level. I would say starting at 74.6 to about 74.4, we have a nice zone of support that we are just about to come into. Did we actually touch the golden pocket yet? Yeah, it looks like we actually touched the 618 of the golden pocket. But what I would like to see on the real low time frames here, 15-minute, I would like to see this continue to kind of grind a little bit lower to actually hit that daily level. Once we get that hit, I will be looking for a scalp long. But the key on that scalp long opportunity, for me personally, I will be pulling a Fibonacci from the highs of today to wherever those lows are going to be. I'm just going to throw it right now, right on top of the value area high. And at this level, around 77,000 to 77.1, I would be looking to at least take probably 60 to 75% profit on that scalp long position, and potentially even look to add to a short or get into a new short position. What we wanted to see over the weekend, and with this bounce up that we've been seeing from Friday, we really wanted to see us break above the 78K highs, the 78,127. That would have officially been a bullish break in market structure. We needed that bullish break in market structure to give us a greater probability that the dump was done. There is a couple counts within this move to the downside from 82.8. You could either count this as a double 1-2 or a single 1-2 impulse. To me, it looks better as a double 1-2, meaning that, yes, we should expect a low below Friday's lows. But we don't know for certain which one it is, right? So that's why we can look to enter longs at actual support levels and take some profit to lock it in, move your stop loss to break even. And if it does continue to ride and finally break market structure, well, at least you're in, and then you could always look to add to it on some pullbacks. The overall high time frame bias, guys, I am still looking for potentially a move, an aggressive move down over the coming months, looking for this to be an ABC that has been completed, our ABC impulse to the downside or upside, that is ABC corrective move, impulse, correction, impulse, done, and now we need to be looking for that higher time frame 5-wave move to the downside. Something like this, where it could take us some time to break below 60K, but that would give us some nice potential bull divs on the weekly, bull divs on the daily. We'll have to see that once if we actually start getting down this low. But the very key thing is if we do start to break back inside of our volume profile, our 3-month long volume profile, it is not going to be a good sign for Bitcoin. We are also losing some very key trend supports. I covered this briefly at the beginning of the stream just a few minutes ago. But if we do start to lose your pitchforks, you remember pitchforks are trend-based supports. It's based off of a trend. We have now lost our most bullish pitchfork. This pitchfork was pulled from very, very key swing positions within this range. We lost it. We backtested it last week. We've made new lows. We're continuing in bearish market structure. We have lost now today, we're starting to lose our most old pitchfork within this range. So both trends are being lost. We're also losing the midline of the channel. Not looking good here, guys. If you're bull, let's just throw our bull glasses on for a second. So far, we did hold the anchored VWAP, and remember, an anchored VWAP is a volume-based trend support level. So if this trend from 66K all the way up to 82.8 is going to stay intact, you want to hold the back test of that volume-based trend support. It's a trending support based off of volume. Very important. And even if we come down and bounce from it again, we could start to form a sideways range down here and then see some expansion to the upside. So the bullish case scenario is that we haven't lost it yet. You can see our daily candle on Friday did wick below it, but the daily candle body closed at that support level or above that support level. It also closed above the value area high of that range. You can see here, or pretty much closed at the value area high of the range. So the bullish case scenario is still probable, or I wouldn't say probable is not the word I would use. It's still possible with decent probability as long as we can continue to hold this. The second we close a daily candle back inside of this range, I flip a lot more bearish. Now, today's daily candle is a very big bearish engulfing candle. You can see we're not only engulfing yesterday's candle, but on Sunday's candle as well. It's not looking good there. Money flow on Market Cipher still does look pretty good on the daily time frame. NAMI is still kind of draining out here on the daily time frame. NAMI is quicker. We did have a bull div on NAMI from Friday's low. You can see from the low on Monday to the low on Friday of last week. It created some bull divs, but we've already topped out on that momentum wave and we're dumping back down below. Another thing, if we look at the 4-hour time frame, what happened when we took out today's highs? 4-hour bear divs confirmed on NAMI. Market Cipher did not have them, but money flow is now draining out again. You can see on NAMI, the 4-hour chart, money flow is crossing into the red, and we are pretty much invalidating the local bull divs that we could see on the 4-hour on this move here. If we go to the 2-hour chart, as we were coming up and SFPing the weekend highs into our naked daily point of control, 2-hour bear divs, multiple drives, 1, 2, 3 drives of bear div, money flow, bear div. As we were coming up to take out that high, money flow is now crossed into the red and is heavily bleeding into the red on NAMI. NAMI is quicker than Market Cipher. On Market Cipher, we had the no bear divs, but we had money flow continuing to drain out as we made that high today, as we SFP'd that weekend high today. On the 1-hour time frame, we saw finally some low time frame bear divs. Well, these low time frame bear divs here kind of played out with this little pull back down here. But even you can see from this high to this high, from Sunday high to Monday, or Monday high to Tuesday high, we have very aggressive bear divs. Money flow draining out, about to cross into the red on Market Cipher. You can see we had bear divs here, and even a hidden bear div printed in the middle of that. A lot of bearish signs that we could have got that big pullback today. We also know that when New York opens with a pump oftentimes at the beginning of the week, it could be a fake pump into a dump. Okay, let me go ahead and also talk about, let's zoom out to the daily chart. Our bigger bearish pitchfork. We rejected the midline. Where is our next major support level? Guys, we will have support levels in all of this in here. Some support levels in there, but the next major big support level is coming down to our point of control of the range, which would also be the back test of our pitchfork band. And there's also a golden pocket there. There's a lot of confluence there. Golden pocket, pitchfork band, POC. I believe there is a daily level in there as well. Yes, a daily level at 68.8. We have a naked daily point of control in there as well. So very big support level coming down into from 68.8 to about 68K. Very nice big support level in there. Today's daily candle close is going to be important. Like the fact of the matter is today's daily candle close, if we close back inside this volume profile, it is not going to be looking good for Bitcoin and for the greater crypto market. Let me go into also USDT dominance. We have been looking at USDT dominance being in a corrective channel for a couple months now. You can see this corrective channel. We bounced. And guys, we talked about this on Friday's live stream as well. We bounced from our 382 Fibonacci, which is a wave 4 target. It was a naked daily and a daily and a naked weekly point of control. We got the SFP of that low on Sunday, last Sunday. We are now reclaiming, and then what we talked about on last Friday's live stream. If you remembered, if you don't, you can go back and watch last Friday's live stream. We pulled back on Thursday. We had back tested the POC on Thursday. And then on Friday, during the live stream, we were starting to break out of this channel. Let me just hide this real quick. During the live stream on Friday, we were attempting to break out of this channel. And I said the big thing to watch for over the weekend, over the holiday weekend, is to SFP those highs, changing market structure. It's an official bullish break in market structure. So we came up, we broke market structure bullishly. And over the weekend, I said, let's see if we can pull back and back test the channel and then continue up. And that back test there is where we could see the big dump come in. Well, we didn't quite do that. We fell back inside the channel and we've just been back testing, and now we're breaking out today. So pretty much at a major decision point on the breakout of this 2-month-long channel. If USDT dominance, now that we've broken market structure bullishly, if it starts to break out on the daily candle and close the daily candle above our channel, that is when things could get very aggressive to the upside for USDT dominance, which would mean it could get very bearish for the crypto market. You can see we do have a nice bullish engulfing candle, engulfing yesterday's candle, engulfing Sunday's candle as well. And what we would want to see is if this is going to really break out here. We've had the small pullback. We want to see some continuation in this week, pretty much. This week, we want to see this continue to explode to the upside. For the bullish scenario, we are chopping and we are attempting to get back inside. You can see we broke market structure bullishly, but we are kind of getting stuck in the channel or at around the channel highs, right? So if we do see a rejection, let's go ahead and pull a local golden pocket. If we see a rejection from our local golden pocket 786, like this zone between, 7.58, 7.63, and we fall back inside of the channel, that is when we could see our bigger move down to our golden pocket or a bigger move down. And we could repull. Actually, we'll repull that golden pocket now. I do not know why TradingView does this sometimes, but yeah, that golden pocket is essentially the right golden pocket there. And then if we pull that sideways range that we were looking at last Friday, just this kind of sideways price action in here, you can see that the value area low of that range is very close by. Yeah, and we could even look just at this guy. It pretty much doesn't change the volume profile too much, but yeah. So just above us is the value area high. That's where we could reject from that golden pocket. And then the value area low is just below our golden pocket below us. So we are still kind of at a major zone. If you are bullish on crypto, there is also hope here of sort of that left shoulder, head, right shoulder, and then you fall back inside. That is when you could break the neckline of your head and shoulders to the downside, and you could see a pretty aggressive move down, at least to value area low of the range that we were just looking at. So we're going to have to see Bitcoin, as Bitcoin is coming down to that daily, naked daily point of control support, this green box just below us. The USDT dominance chart is also coming up to value area high golden pocket resistance. And so that could mean a reversal for both of them. Okay, let me check the chat here. Welcome in, everybody. Thank you so much for being here. Baby Genius, much love to you. I did 20% in one minute candle. I had 0.5% stop, but it didn't stop me. Okay, so Fat Sonic, hopefully it's at least you got locked in some profits before you're down 7.2%. TON, we can cover TON as well. I actually talked about TON in the Telegram, I think over the weekend. Aster finally broke out of the range. We can look at Aster. Tank Wiper, welcome in. What do you think of ES and NQ? Yeah, we'll look at ES and NQ. And Chad P, welcome in. Stefan, we'll definitely look at Tau. Yeshwant, much love to you. Thank you for tuning in from India. Abir, much love, my friend. It's good to see you in here, Abir. Guys, Abir is a great thumbnail maker. He's the guy who makes my thumbnails. If you guys need any thumbnail work at all done, I suggest you reach out to Abir. He's really great at what he does. And yeah, thank you for being here, Abir. All right, Near is definitely one that I want to cover. I'll probably cover Near next. Are we going up now? Nightwalker, we just tapped the golden pocket. If we pull that golden pocket, you can see, not that guy, and let me just delete that for now. Golden pocket was just tapped, I believe. Let's double check on that. So our golden pocket is at 75,666, I'm going to say. And if we look at the low we just made, yeah, 75,645. So we did just tap the 618 of the golden pocket. But for me personally, like I just said earlier in the stream a few minutes ago, the daily level that's just below us and the naked daily level, naked daily point of control that's just below us is where really I'm looking around 75,450 to 75,400. So personally, what I would like to see on the very low time frames here, let's just go to the 12-minute time frame. You see that we had that initial aggressive move down, and now we're starting to get that grindiness in here, this choppy overlap. So I would personally like for this choppy overlap to continue for a little bit longer until we can actually hit that daily level and that naked daily point of control, and then get a nice aggressive move out of that. So I have not taken the long here, guys. I have not taken any long positions from here. I'm still in the long from 74.9-ish. As we're moving down now on the lower time frames, as we're moving down in this channel, you can see volumes decreasing here. So it means that the initial sell-off was on pretty high volume, and now volume's decreasing. So we could see a little bit of a low time frame reversal. I wouldn't say a reversal, I'd say a bounce. But I, once again, be watching that lower high. And currently right now, if we pull our golden pocket right now from the high to the low, our current golden pocket is around 77.1 to 77.2. That is also going to be, if we look at that small range of the past since May 17th, if we look at this sideways range that we've been in from May 17th, okay, never mind. It's a smaller range that I was looking at. I think it is this small range in here. Okay, there was some other volume level there. Maybe it was the naked daily point of control, but that's where I'd be watching. I do think we're going to continue to grind a little bit lower, and if we don't, I miss that entry. I personally don't see enough. We do have some low time frame bull divs. You can see here multiple drives of low time frame bull div on NAMI. Market Cipher even has 12-minute bull divs coming in to hit the golden pocket. If we look at the 1 hour chart, on the 1 hour chart, we are setting up for bull divs, but money flow is just crossing into the red. Just crossing into the red. So that is a little bit bearish. And then another reason why I'm not looking for the longs right now is because you saw those multiple drives of bull div on NAMI. It played out this morning with that move to the upside, taking out the highs. But now we have invalidated our local or our more regional bull divs on NAMI. You can see it's a lower low on the momentum wave, and money flow is back into the red. So for me, I am waiting. I'm being patient until we hit that daily level. I've got the alert set on that daily level right around 75.4 to 75.450. Okay, do you think it will be better if BTC moves to about 83K to stop out shorts and grab liquidity and hit the anchored VWAP, then move down? No, that's a tough one to answer because technically, if we want the higher time frame bearish scenario to play out, we don't really want to take the high again. Now, I understand there's a lot of liquidity above that high. We also did front run the anchored VWAP from the all-time high. But in really what we want to see, if we're seeing this initial move down be an impulse in here, you want to make a lower high. So maybe if we made a lower high at the golden pocket, let's say that we pull our golden pocket from 82.8, and let's just bring it down right below the lows from last Friday. You can see our golden pocket would be coming in around 79.2 to 79.7. And it's also going to be right where your kind of left shoulder highs would be, right? And let's think of this as a topping reversal pattern. Left shoulder, head, and if you get a move up here, right shoulder, and then you break back into the range, you'd be breaking that head and shoulders down. That would also give you your 1, 2, 3. You know, maybe that 3 is going to come all the way down to value area low, and then you see the 4 and the 5 taking out 60K. So I would be expecting a lower high personally. Now, could we get some sort of flat in here first and then see a big aggressive dump? Less likely to me, but everything's possible. We could right now still, guys, technically, we have not broken the value area high or the anchored VWAP. So bullish, the bulls are on the macro time frame, still in control until we lose and start closing daily candles above below $75,000, like 75.2, let's say. Okay, I want to go into some of the altcoins real quick. I just want to talk about NEAR. Guys, NEAR has been a big winner for me, along with ZEC, along with Ondo. A lot of these other people are not trading the altcoins like we have been trading the altcoins. I longed the breakout of this range, the back test right in here. I longed at 145.7, and I closed out some profit, and I told you guys that this 1.618, we're looking for an impulse here, right? I posted about this in the Telegram over the weekend. This impulse, wave 1, wave 2, wave 3, 4, and a 5 that could potentially bring us all the way up to 355 to 364. You know, that area, that more macro golden pocket at 355 to 364. We have some very important liquidity from the last range highs. But what was more important, we talked about this a lot last week. This prior range was a year-long range on NEAR protocol. It ended up being a redistribution range. We broke it to the downside. We distributed down. After hitting into a key low, this was, by the way, a key pitchfork low. Let me see if that's this. Nope, that's not that pitchfork. It was a key pitchfork low. We bounced, and we started to get back inside of the volume profile. Remember, last week, we talked about the highs at 216. Where were they? We had some highs at, or it was the value area high at 216 into a golden pocket. If you pull your golden pocket, 216 to 220, I believe it was. Yeah. And well, we had a few things we were looking at yesterday. We were looking at the initial high, the SFP of the high into this golden pocket. If that didn't break, we weren't looking for the short. Last week, we did not see any SFP. We didn't take the short. The next level I was looking at was around, now I'm mixing stuff up. I think it was 216 to 220. We were looking at a different golden pocket into the value area low of the range. You can see the value area low of your previous range was there. We broke straight back up into it, guys. And once we started to break up into this volume profile, really the next level we were looking at was the POC in confluence with the back test of our pitchfork that we broke down from. That is this bigger bearish pitchfork that we broke down from. And potentially coming up over the weekend, when I laid this picture out to you guys, I said, we're hitting into the 1.618. We could get a rejection from that 1.618. But now that we have an impulse here, look at the increase in volume here, by the way. So 1, 2, 3, we could see a pullback from this area, or our 3 could still be continuing. Guys, on the daily time frame, our 3 could still be continuing. And the reason why, if we're looking at this as some sort of contracting diagonal in a wave 1, we get our pullback in a wave 2. That means that, and this all could be a 2. This could be a running flat in here. But let's just say that scenario, that this is a running flat in a wave 2. So that means this would be the start of our third wave on the daily time frame. Okay, in your third wave, you need 5 waves itself. 1, 2, 3. We could get a pullback here, 4, and then we could actually come up and hit 308, which is a weekly level in confluence with your value area high for our wave 5. That could just be the start of the bigger third wave. That could be this third wave ending. Then we would expect a pullback that could last, let's just do this real quick. It could last about a month and a half, 2 months, right? You want it to last as long or longer than your wave 4. So we could get a pullback that lasts quite a bit, 2 months, before finally seeing that 5th and final impulse up to 355 to 364. Where that could be the end of this larger daily time frame impulse, and then you could get a pullback to golden pocket, and then you could maybe see continuation, or we'll look at that if and when we get there. Now, another scenario that we're looking at, because now we've officially hit the 1.618. If we pull a trend-based Fibonacci extinction from the lows of 1 to the highs of 1 to the lows of 2, we've hit the 1.618. So, but that means that we wouldn't count this as a running flat, right? Because if you're pulling the trend-based Fibonacci extinction of a running flat, you would go from the lows of 1 to the highs of 1 to the C wave of the running flat. That is going to be right around 320, which would be in confluence with your pitchfork band. And we're breaking back inside the pitchfork. So the reason why I'm saying our wave 3 is not done yet, we have 2 possible counts for this impulse, right? And we could be looking at this as a wave 1, wave 2, then our wave 3 impulse, we would have to say 1, 2, 1, 2, 3, 4, 5, 4, 5, right? We would have to get 2, 4, 5s. So that's our more bullish count in my opinion. That's our more bullish count. Now, me personally, I like to go with a more conservative count because this is already pumped over 100%. I would say that this is a wave 1, this is a running flat in a wave 2, and we're in our third wave now, but our third wave is still not complete. You can see very clearly from this low at 124.6, wave 1, wave 2, wave 3. Now we're hitting that target. Do we pull back and back test the pitchfork, which is happening as we're speaking today, before coming up to 308? I think 308 is going to be a major. I have a take. I'm still in the long position. I already have a limit take profit at 308, guys, because it is your previous range value area high. We have broken back inside our volume profile. We are right now, in some ways, back testing this POC, or kind of at this POC zone. And if we can actually close the daily candle above the POC, and you can see yesterday, we closed the daily candle just above it. Let me just throw that on the chart real quick. So if we look at this daily POC, we did close yesterday's daily candle above the POC. And if we can hold, so what's going to be important today is we don't want to close this red candle below our pitchfork. If we close below the pitchfork, you could see a bigger pullback. Let's talk about that. Where could our bigger pullback bring us to? So now I just want to focus on this structure here, because this structure looks like it's incomplete, right? Wave 1, wave 2, wave 3. Now, if we pull a trend-based Fibonacci extinction from the lows of your wave 1 to your wave 1 highs to your wave 2 lows, we've surpassed the 1.618, which in an extreme corrective move, you can make it to the 1.618, but we've surpassed that. We've already even hit the 2 Fibonacci, and if we look at our 2.618, we haven't quite got to 2.618, but we've already passed the 2 to 1 Fibonacci extinction level. Also, our volume is drastically increasing on this push to the upside, meaning that the move that we're seeing hold on, let me get rid of that. The move that we're seeing from 124.6 is very likely to be an impulse. 1, 2, 3, pull back 4, and a 5. But where could we pull back in our wave 4? Where could we look for long opportunities on near? So if we take our Fibonacci retracement from the lows of our wave 3 to the highs of our wave 3, we look at our wave 4 targets. Well, we have a level at 240 is our 382. What else do we have at 382? We have a fresh daily level at 340. That's a new daily level. 239.4, 240. This general area, you can see this daily order block right here. And also, it would fill in the fair value gap that was created from yesterday's candle. So coming down to 240, actually, I will set an alert right now. And what I'm going to say, add to long for wave 5. That is what I personally would do. Now, I'm comfortable doing that because I'm in from much, much lower, guys. I'm in from 145.7. I did compound it once, but I've also taken profit, I think 3 times now on the near long position. So I'm comfortable adding here. My average position is still going to be way down in this area. If you're looking at getting into a fresh long position on near, if we come down to 240, what you want to see is as we're coming down there, you want to see some bull divs forming on the chart as we're making this move down, and you really want it to be like a 3-wave corrective move down. As we're coming down into that area, you want to see some bull divs between the B wave low and the C wave low, right? These 2 lows in here. And I will try to keep you guys updated on that. Now, one thing I don't like here is this does look like a contracting diagonal. 1, 2, 3, 4, 5. And that's your contracting diagonal to end the third wave, maybe. You know, you have like a 1, 2, 3, 4, and then this is your contracting diagonal to end the third wave. We did actually hit into that 1.618 target. I did take some profit there right at 290. And then, meaning that we could get a much bigger pullback, but we would, yeah, the much bigger pullback is between the 382 and the 0.5 Fibonacci. So for me, the 382 has more confluence. If we look at some naked daily points of controls, naked weekly points of controls, we really don't have any naked dailies in confluence with our wave 4 targets. Let's see if we have any naked weeklies. I actually haven't even checked this yet. Not really. Okay. The other thing we could do is we could look at this just last contracting diagonal in here. We can pull from the bottom of that diagonal to the highs. And we could turn on our golden pocket. And you can see your golden pocket is also going to be right around the daily level, right around the 382 Fibonacci. So 240 to 235-ish, guys, is going to be a really important level of support locally. Yeah, I would say if we pull back down to that level, that's where I'll be looking to add to a long. Even if this is some sort of intraday flat in here, I would not look to be longing right now. The only way, no, I personally wouldn't at all be looking to long right now at near. At 308, because it is the value area high and the weekly level, I'll be looking to take some more profit. And really, I'm looking to get up to like that 355 to 364 overall on the daily time frame. Still looking for this impulse in here to play out. Our wave 4 pullback could take over a month. It could take 2 months. So we'll keep an eye on that. But our macro golden pocket pulled from our last major weekly high. Now it's not the overall highs, but it's a major weekly high into that low. Golden pocket's coming in. And if we look at that upper range, you can see the value area low of that range is right in that zone as well. Value area low of the range. You could even just pull this upper range in here. You can see value area lows at 360 or 393, which is where our golden pocket is going to be. And then once again, guys, taking liquidity of the highs of this range. So I know that this chart looks messy. We have an upper range in here. We have a new staircasing range in here that lasted a year long. Each one of these ranges lasting more than a year long. And then we started to form some accumulation in here. We're expanding right now. We're expanding back inside of our previous zone of balance, which is this range here between February of 2025 and November of 2025, so almost a year long. And now, could we take out the range highs that are coming in at 364? Yes, we could. And I'm not saying it's going to happen today. I'm not saying it's going to happen next week. It might take a couple months, maybe a couple months to play out, but near is looking pretty bullish. Daily time frame looking pretty bullish. Now we do have some pullback opportunity because you can see here our stochastic RSI and RSI are pegged out together. Your momentum wave is pegged out. We're starting to look like it wants to roll over. NAMI has already printed that peg and has a very small bear div between the highs on Saturday and the highs that we made today. If we zoom in onto the 8-hour time frame, looking at that important 8-hour money flow, you can see that Market Cipher has bear divs, multiple drives, money flow is topped out, bear divs, multiple drives, money flow, bear divs as well. So we could get a pullback down to 240 from here. At 240, I will be looking for some long opportunity. Okay, that's about, and then of course 4-hour time frame, you see kind of the same thing. You're starting to see the bear divs come in. Money flow still looks pretty good, but it's topping out here, and you can see 4-hour bear divs, money flow bear divs. Essentially the setup that I look for a decent pullback. Okay, that was near. Let me go into, let me scroll up in the chat and see where we were at here. Guys, please do hit the like button. I do want to take a second, actually real quick, to shout out the partners of the channel. The main partner of the channel is BYDFI. They are a VPN and KYC free exchange. All you need is an email and a password to sign up. If you do sign up using my affiliate link in the description below, you'll get a minimum of 20% discounts on trading fees, and you can actually earn up to 40% discounts if you deposit some large amounts into the exchange. They're offering up to $8,100 in futures trading bonuses just by trading USDT contracts on BYDFI, whether that's altcoins or Bitcoin. You can earn up to $8,100 extra, depending on the volume you trade, the amount of volume you trade. They're also offering some of the best initial deposit bonuses in the entire industry. So for instance, if you deposit $100, you can get a 50% bonus on that. Most exchanges will only give you a 20% bonus on that. They're offering 20% deposit bonuses up to a $1,000 deposit, and they're offering 10% deposit bonuses up to a $20,000 deposit. So really good incentives to get on the platform. I've also partnered with BYDFI to create a Telegram community. It is a private community, but it is free. All you need to do in order to get into that community is join BYDFI using my affiliate link in the description and deposit a minimum deposit of $100 or more. You can deposit more if you want to get some of the bigger rewards. Now, once you've done that, you click the Telegram link in the description of this video, and in that Telegram channel, it's a verified channel, you type in /verify and then your BYDFI user ID, which will probably be a string of letters and numbers for you guys. But /verify and your user ID, that'll get you into the Telegram. Now, guys, we are going to be making some changes to the Telegram because a lot of people are depositing initially on the exchange with the minimum amount, and then they're not trading at all. And they're pretty much reaping the benefits of the Telegram without really contributing to the community. So we don't have a timeline yet. I'm probably going to give you guys a couple months. But if you do not stay active on the exchange, then eventually you could get booted out of the Telegram and have to redo the process again. So I just want to encourage you guys, if you do join the Telegram, to at least stay somewhat active on BYDFI. You know, even if it's just a couple trades a month, a few trades a month. Encourage you to stay active so that you don't get kicked out of the Telegram. Second partner of the channel is another non-KYC exchange. It is Blowfin, and Blowfin is offering VIP1. Oops, hold on, guys. Let me reopen that. All right, why is that? Blowfin is offering 30%, VIP1 for 30 days, excuse me. If you deposit $5, you can get a $10 voucher. And they have some pretty good initial deposit bonuses as well. You can see if you deposit $100, you get $20. 500 gets you 100. 1,000 gets you 200. 20% deposit bonus. $2,500 gets you 500. And then if you deposit $10,000, you can get a $1,000 futures bonus there. So if you're interested, it is a way to support the channel by using any of these affiliates. It's a way to support the channel. You can also hit the like button, subscribe to the channel, share the videos. That's another good way to help the channel. I do have 2 KYC exchanges. They're MEXC and Bybit. MEXC is offering a 10% initial deposit bonus up to $1,000, and Bybit is offering up to $30,000 in futures trading bonuses, depending on the amount of volume you trade. And then lastly, the last partner of the channel is NAMI Trading. And NAMI is this momentum and money flow indicator. Guys, you see how important NAMI has been, especially with Bitcoin too. As we were making those highs earlier today, it prints the bear divs for you. It shows you the money flow draining out. As you're coming up into key resistances, you see the confirmed bear divs, knowing that you maybe should take some profit because you could see a reversal or even an entry for a short position. So if you're interested in purchasing NAMI, I partnered with them to get you guys 50% off. Just click the affiliate link in the description, and when you're checking out on the website, type Divine50 in the discount code promotion box, and it will get you 50% off. For me, I use NAMI for my entry and exits on my trades, or for confirmations to enter and exit trades. And since I've been using it, it's greatly benefited my profit margins. Okay, let's go back into the altcoins. Let's see, what was the next one we were going to look at? YLFI, and I'm going to go pretty quickly, guys, through these altcoins because I know we have a lot to cover. USDT, Binance. Ooh, okay, you took a long on this, and man, I mean, first off, I would say you're very likely to come take out the lows there. Daily time frame money flow heavily into the red. You printed a hidden bear div on that lower high, and it is a macro downtrend. Actually, I would be looking at this as some sort of wave 1, wave 2, wave 3, wave 4, and I would be expecting to take out those lows in a wave 5. You could even pull those targets going from the lows of 4 to the highs of 4. Put on your wave 5 targets between 0453 and 0357. You could even pull. Now, I don't like to use the listing price. So what I would do with a bearish pitchfork is I would go from this high to the low to that lower high there. And I'd put on a skiff pitchfork. Yeah, you can see that the bottom of the pitchfork could be around there, and very nicely respected on the pitchfork. Bounced from the band, lost the band, back tested it, bounced from the midline, rejected the band, bounced from the midline, lower high, bounced from the midline, lower high, lost it, back tested it. A little bit of a deviation. And right now you're chopping. You can see you're chopping in this band here above it throughout for about a week. And now we're losing it with high volume today. Yeah, let's pull our local fib. Okay, let me zoom in here locally. 2 hour. You're even hitting probably the 886. Let's see. Did we hit the 886? Let me just do this. Yeah, you've hit the 886. So because you're in a larger downtrend, if you see a small pullback, like in the grand scheme of things, this was a small bounce in a larger downtrend, right? If you hit the 886 pulled from the lows to the highs of that move, you're more likely now to take out the lows of that move. So because we're hitting the 886, we're bouncing from it. You can see we're bouncing from the bottom of the pitchfork band and the 886. But I would be expecting this might do something like this and then continue down. It doesn't mean we have to take it out today or even tomorrow, but it's likely we take out those lows now. So I'd be very careful with longs. Actually, here, you could be even looking at this last range and prioritizing. If you come up and retest value area low POC, you might be able to even short the bearish back test. Let's do something like this. Yeah, I mean, that's where I'd be looking around where we're at now to the top of the pitchfork band. And then if we reject here, you're going to expect the continuation to the downside. And the zone that I would really start to look at, the very first zone of nice support would be, 1.236 to the bottom of the pitchfork band. And then you might even come down a bit lower. Yeah, 4-hour money flows leaving pretty aggressively. Even today, you printed a hidden bear div on that high Monday yesterday. And essentially, you're losing this support that you've been in. You can see you broke above the pitchfork band, back tested, lower high, back tested, lower high, kind of chopping and forming a triangle in here. In some ways, you kind of have this triangle that was forming throughout the weekend, but you dumped coming into the triangle, so you have a higher probability of dumping coming out of it. And yeah, I mean, you could see take out the low and a double bottom and then look for a nice move up, and I would be pulling your golden pocket from the highs of the impulse to the lows, wherever they're going to be, and then you could check your golden pocket, and wherever that's going to be, you could take a long. If you SFP this low, you could take a long up to this general area. But we would have to look at that more as we actually get down there in real time. So what I can do for you is I will set an alert on that low, and I will let you guys know how it looks when it gets down there, if we're SFPing, if I would be interested in a long. I would want to see the SFP. I'd also want to see some bull divs being formed in this price action, this market structure. You want to see bull divs being formed. Because you might not SFP. You might just come straight down here. But I'll let you guys know in the Telegram. Remember, if you want to get these alerts, these kind of signals, not signals that I give you, but my opinions on what's happening, if I'm not live, that's the way to look, is to check the Telegram. Nice big dump in volume too. So not looking the best here. Let me just double check this on Fib. Yeah, either way, you hit the 886, guys. All right, Ton. Yes. Okay, Ton is a good one. Was it USD? Okay, so from the dump that we saw in October, where a lot of altcoins really just shit the bed, right? Like went to zero almost. We've been forming a nice sideways range in here. Oop. Nice sideways range in this box here after the dump. I'm not including the dump wick. If you look on, like, I think I pulled that on the 4-hour, the dump wick is not included. So if we're looking at this sideways range, we did break out pretty aggressively, 1, 2, 3, and we rejected by taking out those dump highs right before the dump happened. We took out the highs right into the golden pocket at 290. The fact that, and we broke out of the range with a nice big increase in volume. You can see this nice increase in volume on the break. What is a little bit scary here is this could be a very aggressive high time frame corrective move before coming all the way back down. We are now back inside of our volume profile of that range. That is not a good sign that we're falling back inside the volume profile, or we're chopping around. You can see right now we're actually above the value area high. One thing that I did post about in the Telegram, so far, this move down now is more likely to be a confirmed 3-wave move down, because we did take out the B wave high. So if this is an A, B, C, we took out the B wave high yesterday, meaning that it's a higher probability that this is a corrective move down, and that we do need to start to really impulse here and take out that high eventually. So yeah, we're chopping around the value area high. Personally, for me, I would be waiting a little bit. If we do see, let's see, because this could be all part of a bigger wave 1, and then we could be seeing some sort of flat in here for a wave 2. Or like that is the flat for a wave 2. So a wave 1 here, you get your flat here for a wave 2, and then this could be a dump in a wave 3. So we don't have clarity yet. And if it's a dump in a wave 3, if that's the bearish case scenario, then this was a wave 1 this pullback to golden pockets of wave 2, and then you're going to see the wave 3, 4, 5 come in. And this is probably going to get pretty aggressive to the downside. So what we can be looking at very locally is pulling our fib from yesterday's high to today's low, or yesterday's low. Golden pocket. We want to watch for a rejection from this golden pocket at 207 to 208. And then you can also pull a volume profile of kind of that range, and you can see the value area high of that range is going to be right there as well. You bounce from value area low. You're at POC right now. This 207 to 208 could be a very nice short position for us if it's the bearish case scenario. Now, if it's the bullish case scenario, your A, B flat, C played out, and then you're looking for now starting to impulse to the upside. So you want to break above that value area high, and preferably it would be nice to close the daily candle above yesterday's high. It's not required, I should say. Money flow still looks pretty good on the 4-hour. You are not developing any bear divs on the 4-hour, and look at bull divs were developed here. Money flow coming up. And then if we look at our 8-hour time frame, on the 8-hour, bull divs, as you were making these lows, bull divs. On Monday, you did print that hidden bear div, or kind of, Sunday, Monday, hidden bear div there. Not the best thing to see. But I would say money flow's crossing into the green on NAMI, and it's starting to bottom out on Market Cipher. Daily time frame, you do have bull divs on the daily time frame. If we're looking at the bullish scenario, let me just delete this real quick. A, B, C, you have a truncated C. You look at these two lows here. You do have bull divs on the daily time frame here. Money flows crossing into the green on the daily time frame, and on Market Cipher, money flow is rising still on the daily time frame. No bear divs. So yeah, the bullish scenario could play out with TON, guys. Actually, I'm expecting it kind of to keep running like Bitcoin. The other thing we can look at is going from the lows of wave 3 to the highs of wave 3. If we look at our logarithmic golden pocket, the bad thing, you did hit that golden pocket. So now we cannot say that this was a wave 1, wave 2, wave 3, because your wave 4 cannot touch that golden pocket of the wave 3. And actually, in that case, do we have any naked weeklies or naked dailies up there? No naked weeklies, but we might have a naked daily up there. Yeah, you do have a naked daily relatively close to your golden pocket, your higher golden pocket. So another zone of resistance I would be watching is like from 234 to 240. And in that scenario, you just might get an extended corrective move, like a much larger time frame corrective move, where you see something like much larger, and then you might continue it up. So local resistance above 207 to 208, that could give you a major continuation locally. This being a wave 1, a flat, or a 2 flat and a B, and then a C, or a 1, 2 flat, and then a big 3 to the downside. Now, on the weekly time frame, this wick is a bit aggressive on Binance. But on Coinbase, I believe it was, let me see, USD. Yeah, on Coinbase, you don't really have that wick there. That wick was like right here, or I think it's this guy right here. Man, it would have been so much nicer to take out even this low, because then you would have some very nice weekly bull divs here. You don't. But weekly money flow is rising nicely on NAMI. And actually, let's get back to the Binance chart. Yeah, and unfortunately, you can see we had some bull divs between these lows and here, bull divs, and I guess a couple trigger waves afterwards. So that's kind of nice. And money flow is in the green, crossing up. Market Cipher also had some bull divs between these two lows on the weekly time frame, and money flow is overall trying to curve to the upside. Unfortunately for TON, rejecting that golden pocket at 270 to 290 and taking out those highs right before the aggressive dump is sort of a bad thing. And so what I would say is you don't really want to, like the low that was put in last week, you want that to be the low. You really want to start breaking above 290. You are breaking out of your descending channel. So the entire price action, you're breaking out, pretty much back testing that channel. And you want to see continuation. And the next level I would be looking at, the next major level on TON would be to be taking out the liquidity of the second pivot of the channel at 375, let's just say. That is also probably going to be where your 786 Fibonacci is close by. All right, let me go to the 2-day time frame. We can look at our ranges. So let's talk in terms of volume profile trading. We had an upper range in here. We lost it. The market now considered a new fair value in this area. We lost it, and then now the market was considering a new fair value in this area. We were back testing this prior range. So what we need to do is pull the volume profile for that range. And yeah, you can see pretty much you were back testing the value area low of the range, and that's where you rejected on May 7th. What we need to do is we need to see us get back inside this range. And honestly, I would like to at least hit the value area high and grab that liquidity. It's a pretty big gap there, though, between those two levels. Maybe the better level is coming up to the range highs where the 786 is. So that's like the next major resistance is up in this area. Let me go to the 4-hour time frame. Yeah, it's not going to give us naked dailies up there. Oops. We do have a naked monthly that's near the value area high of the range, around 338, let's say. So we have some levels, but we'll start looking at these upper levels, guys, when we start to break above the highs from a couple weeks ago. We really need to break above 290 first. Once we start doing that, we can talk about that. Yeah. All right. Let's see here. Tau. T. Okay, so we have our range that we've been chopping in for a few months, going all the way back to April. Man, honestly, it's a lot of chop around the POC in here. Let me get rid of this low time frame stuff. It's starting to look like we might be forming a triangle kind of in this zone. we could extend this triangle a bit more. You have an A, B, C, D, and then you want to see that E. So we still need to wait. I would like to see a D form first before we do, but you can see if we pull up here in a 3-wave move and reject from that high, that's also where your golden pocket is going to be at, like 314. Then we could look for a pullback down to the bottom of the triangle. I'll draw that a little bit more professionally here. And we could maybe even go with that. Let's go there. Yeah, and one thing that I do kind of like about Tau is we can see a pretty 1, 2, 3, 4, 5. You got an impulse in here. Now, the thing is with a 2, you can't have a triangle in a 2. You can't have a triangle in a B, though. And then if we get one more impulse in a C, we could be looking at, I would be looking at taking out these highs. Let's pull that trend base Fibonacci extinction. Yeah, it's going to be your 1-to-1 at 578. Could be a decent target to be looking at there. So a couple things I'd be paying attention to, though. We still are dealing with this smaller range in here. So we have our larger range. You can hide that. You can obviously pay attention to those volume levels, but for now, I would be paying attention to this range in here. You can see value area high is going to be near those internal highs. You also have a daily level that's coming in right there. And if we pull our golden pocket from the last daily high to the low, let's turn that off, log scale. Yeah, I would really be looking at potential rejection from this zone in here. And actually, let me mark out that daily before I zoom into the 4-hour. We'll mark out that daily level. You can see right in here, right at the golden pocket, 305-ish, let's say. Daily level, 304.64, 304.85 is the golden pocket. And then your value area high is just above that. And even looking at this, guys, you can see you have a 1, 2, maybe a 1, 2. You get your big third wave here, a 4, 5. Actually, you would need to, let's see here. Uh, 4, 5, 4, 5. Yeah, that's kind of actually hard to count there because you got this pullback 1, 2, 1, 2, 1, 2, but then your trinary 1 and 2 is bigger than your secondary and your primary. So I'd have to say 1, 2, 1, 2. This is your 3. You have a running flat in here for a 4, a 5, but you don't have a second 4, 5. So that doesn't work. All of this could be a 1. This could be a 2. This could be a 3, a 4, and a 5. And you're looking in here in the 1, 1, 2, 3, 4, 5. If this is impulsive to the downside, then you are looking for a lower high before potentially continuing down. So I would just say with Tau, pay attention to that like 305, 304 to 307 level. You are above the POC of the range. And you can see also that next, you have a pretty big volume gap in here until you get up to this resistance. So if you break above last Friday's highs, or last Friday's highs, I would suggest you're going to come up pretty quickly to 305-ish. On the lower time frames, you look like you're forming a little bit of a channel in here. I don't like this 1 hour channel that's kind of forming. Let's even pull it up there. But I would just be watching to see if you do reject here, come down to the bottom and bounce again, then you might be able to come up to the top of the channel, which would be 305. So you could be looking around like 277-ish all the way down to like, yeah, what is this? Yeah, I would say 277, right where you're at right now to about 277. This little internal liquidity from last Tuesday into the 786 would be nice. I'll set an alert there. We can do SFP long only if we start bouncing. I would want to zoom in on like the 15-minute and see bull divs as you're coming into SFP this into that 786. That could give you a potential scout, a trade up to 305. But you want to be very careful because if this does something like this and then breaks down, you're going to be, stopped out. All right. Coin just broke the 4 hour higher low. That's Coinbase, right? I think you're talking about the coin just broke the 4 hour higher low. Yeah, to the downside, this higher low. It did just break that higher low. Trending going back to the February lows. I see what you mean. Bullish market structure in here. And now we're seeing our first break in market structure by taking out that guy right there. 182.8. Yeah, and what we could do is we could just pull this volume profile, all of this upper range. You're pretty much rejecting the POC. You can see you keep coming up to the POC, you keep rejecting it. That was a nice SFP, by the way. And the big thing I would be looking for on this Crypto Clan world is an impulse. Wave 1, wave 2, wave 3, 4, and then you're going to take out those lows and hit this 1-to-1. Actually, never mind. That's an old target. So we could pull our entire Fibonacci golden pocket. Ooh, I wouldn't want to come down that low. You can see what we had with coin is a nice accumulation range right here. Tap 1, tap 2, tap 3, expansion up. So we don't want to come down that low again. We can pull the volume profile for that expansion range, but you really don't want to. Yeah, I mean if you do get down to $79, like $80, let's say, that's a spot buy for me, for sure, because that's the back test of that accumulation range value area high in confluence with your macro logarithmic golden pocket. I really wouldn't want to make it down there. In the bullish case scenario, you really want to like take out your range, your lows. Man, that's bad though, because starting this with an impulse down is not what you want to see. So you could take out those lows, get a nice swing long up to golden pocket, and it's probably going to be value right around the value area high there. And then you would be looking for a move down in a bigger ABC. Because if it starts with an impulse here, we have to classify it as an A wave. or a 1 to the downside. And you're going to get 1, 2, 3, 4, 5. Either way, I would really be watching for a rejection at this POC and taking out the lows from February 13th. 139-ish. Let me get rid of this. Let's get rid of this. Oh. Yeah, and you even had some bear divs on the daily here. Higher highs, lower highs, money flow crossing into the red, lower highs, money flow in the red. It doesn't look too good there for coin. If you really want to zoom in on this thing, you could just pay attention to this corrective price action. Pull a volume profile for this corrective price action. You can see you're losing the POC of the range of the past, since February. You've lost the POC, you back tested it last week, and you're dropping. Now, very, very locally, you probably have a local golden pocket. Okay, yeah, where you're at now with liquidity there. So you might be able to get a scalp long. Now, personally, I would not even, if you get a move here, it's probably going to be something like this just to back test those POC again, and then you drop down to value area low, which you could get a scalp long from value area low as well to back test POC again, or like lower high golden pocket. On a higher time frame, it looks like we're probably going to take out those lows at 140. Yeah, money flows back, crossing back into the red here. Money flow topped out here. You also have bear divs on the weekly through this. Through this. So I would be very cautious on coin. Thank you, Stefan, for the super chat, man. Much love to you, man. I appreciate the super chat so much, and you're absolutely welcome for Tau. Honestly, for Tau, because Tau was looking really bullish at one point. This move up that we saw here on the weekly time frame did look pretty bullish, and there is a way to count that as impulsive. But I would, of course, this daily time frame triangle could give you could be in this for another 2 months, right? Or a month and a half or so. One thing that was nice is at that low that we printed a couple weeks ago, we printed a hidden bull div, which is continuation pattern, meaning that we could even in a continuation pattern, we pumped coming into this. So we do have a higher likelihood of pumping coming out of it. And if we print, say we reject at 305 and then we come down to like 270-ish, and then we print another hidden bull div in here. Actually, the hidden bull div would have to be lower. Or even a bull div. Well, you wouldn't print a bull div. If you did print another hidden bull div in here, then that would be even nicer to see this thing break up. But we'll keep an eye on that, Stefan. We'll keep an eye on Tau as this develops. And we can just try to play the trades within what is given to us. Okay, yeah, guys, please hit the like button if you did do get anything out of the live stream today. I'm sorry I was a little bit late today. I have about 20 minutes left, guys, so I'll get to as much as I can in those 20 minutes. Let me see. I know that we wanted to look at the ES and NASDAQ. If you guys remember, we hit that 886, and I said because we hit this 886, we have a higher probability to take out the highs. That was last week, I believe. We were rejecting the 886 on last Friday. But because you hit that 886 and we're in a larger uptrend, if you have a correction and then you see a retrace up to 886, even if you get a small pullback, you're more likely to take out the highs that originated from. And we've done that now. So taking out the highs. I honestly, personally, guys, higher time frame analysis on the ES. I really do think we are going to continue grinding to the upside until we get up to the top of the pitchfork. We saw massive, massive daily bear dips going from July of 2025. All of this. Look at how many drives of bear div we created. Money flow was draining out at that entire time. It gave us a very nice pullback. Now, I personally would have liked to see that pullback come just a little bit lower. We didn't. But we're breaking above the pitchfork band. We chopped for a couple weeks and flipped it into support. And then you can see that last time we flipped into support, we're now starting to push up aggressively. And I'll zoom in more so you can see that. But you can see chop, chop, bounce, bounce, nice big bullish engulfing candle, big volume imbalance. And I would expect that this uptrend is going to continue until we get up to the 1.618 and the highs of the pitchfork. But once we get up there, that is when we really got to be careful for a pretty big rejection. And when I say big rejection, we know the S&P pretty much goes up and to the right, but this was a big rejection on the S&P 500. So if we continue going up here, could we see another rejection all the way back down to the bottom band of the bottom of the pitchfork band, or even maybe just something like this, right? On the weekly time frame, yeah, and we do have to be careful for bear divs as we're coming up into that target. We really have to be careful for bear divs. And I believe that 1.618, yeah, it's a huge, so that's going back to March of 2020. We're looking at this being a wave 1, wave 2, all of this is part of a wave 3, and then the wave 4 pullback. In a very bearish scenario, we can actually look at that. Let me just go to the monthly chart. And then we could pull a Fibonacci from the lows of wave 3. And I'm just going to put it right on that 1.618. Wave 4, and then we'll make sure that's... Oops. Yeah, in a very bearish scenario, you could reject the top of the pitchfork and come all the way down to the bottom at 5,700. That's old. So in other words, if we're going to get that big crazy crash that a lot of people are predicting, you come up here, you reject, and then we could literally like work our way down in an impulse. Maybe you see something like this and come all the way down to the bottom of the pitchfork in confluence with your 382. Now you would expect that to be as long or longer than your wave 2 pullback, which took 280 days. So maybe a year-long pullback down to 5,800 or 5,800, and then a move up to new all-time highs after that. But if you're trading this like day trading, I really don't day trade the S&P 500. Man, even this looks like pretty nice. Like impulse, correction in here, and then you could get another impulse up. Money flow looks pretty good. You're printing hidden bull divs on the 4-hour, 8-hour. Money flow still looks good. You are starting to get some bear divs in here on the 8-hour, but money flow still looks pretty good. Okay. I am short BTC from 78K and long at the moment, all green. Oh, cool. Nice, Fat Sonic. It's good that you're short there on BTC. Adam, yes. I believe I use Binance chart. Yeah. We've got some older TA in here. We're trying to break out of the value area high. Actually, what I would do is, yeah, I would look at it from that low there. You're trying to break out of the value area high now. You can see here, we had a deviation out of the value area low, got back in it, flipped it to support, worked your way up to POC, saw small rejection, but then was able to flip POC, and now we're trying to really break out of value area high. Today's daily candle did wick the high from May 13th, though, so you do not want to close this daily candle back inside the value area high. That could be very bad if you close under like 217.8, or let's just say 218. You don't want to close under 218. And in a prolonged accumulation, like now I'm ignoring this giant wick, okay? Let me see if Coinbase has that wick. No, it doesn't. So yeah, and actually we're breaking out of this nice channel as well. We had the aggressive move down. I talk about this a lot on the channel, the aggressive move down, and then you start that choppy overlap, right? But we're attempting to break out of that choppy overlap. Money flow looks very, very strong on the daily time frame. You unfortunately now you could be printing a third drive of bear divs. High, high, high. You know, lower highs in here. But money flow looks so good to me, and you're breaking out of this channel. You're coming up right into that zone. So we had our rejection from this resistance. It was a golden pocket. It was a naked daily point of control. You got a nice, I would say, day to swing trade on that. Not swing, but day trade long, short on that. So we can get rid of that. And now we're coming up to our next resistance area, which was this guy that we talked about. Naked weekly point of control. It is also going to be a daily level up at 235. But there must have been something else there as well. Yeah, and it was your 786. So this was the golden pocket, and a naked daily point of control gave us this pullback. We're coming up to the naked weekly in the 786 now. But what's actually more important to look at is pulling it from the highs of the channel to those lows of the channel. And you can see your larger golden pocket is also in that zone. So now the two next major levels, let me just change this only to 786 because we've already hit that golden pocket. So we're at the macro golden pocket pulled from the highs of the channel to the lows of the channel. It's a naked weekly point of control, and it's your 786 of the smaller Fibonacci pull. You break above that, you do have your 786 value area high in here. That would be, I would expect us to shoot up pretty quickly to that area. You have a daily in the middle of it, but maybe that daily just, you know, if we break above this, hit the daily, I would be expecting something like that. And then, of course, the range, the channel highs and the range highs, or I guess it's not your entire range highs, but those channel highs, you have a naked weekly point of control up there. That's going to be important as well. Did we actually hit the naked weekly? 229.5. It looks like we did hit it. We're rejecting the naked weekly. Yeah, exactly. Rejecting the naked weekly on today. Sorry, today. And it is the macro golden pocket, guys. So be careful. 228 was the start of our macro channel golden pocket. And it was, yeah, and we took out these highs as well. So the big thing is, and the volume profile is different than on Binance. Actually, I would like to repull this and just look at this price action. Yeah, that's the one we had on Binance. So your big scenario is if you reject here at this resistance and then you start to close daily candles back inside of this volume profile, you might see a move down to sweep all of this liquidity that built up. So in other words, we could pull, yeah, I would be looking around 199 to about Where's the low? Right here, 198. So this zone in here would be your next kind of support level. Because you could reject here, fall back inside, get that move to POC, and then you really want to hold that and get the next breakout with volume. I wouldn't be longing right now. You would be longing into macro resistance that we just hit today. If anything, we want to look for shorts, you know. Yeah, and then I guess the big thing to think about would be, what is this? Is this a 1, 2, 3, 4, 5, some sort of contracting diagonal? You do have overlap already. I would just be watching on the daily time frame. Is the candle body going to close above 218? Let's just say 218-ish, 218.3, 218. If you do, you might be able to continue busting into this for a bit and maybe break out up to the next level. If not, you're going to see, if you start to fall back inside, you're probably going to see a move down to 199, 198. And we can even look at this channel in here. Smaller channel, this ascending, all this ascending price action. Yeah, and what I'd be waiting for potentially, because remember, we're at a macro resistance, your macro golden pocket of the bigger blue descending channel. So could we form some sort of topping reversal range here? So we maybe get one more high into the highs of the channel, you know, get a bounce from the midline and then see some sort of like range that forms in here, like a distribution range, or, you know, a pattern trader would call a head and shoulders, left shoulder, head, right shoulder type of thing. So we can keep an eye on that as well. What we can do is actually set an alert on that high that was created today and look for some sort of SFP short. But for me personally, I would want to see us take out that high and hit the top of the channel and then lose that. And so you would have to put your short, once you lost that high, you'd have to put your wick or your stop above that wick. And then I would be targeting down there. Or maybe a TP1 at these lows, if that is actually going to be the low. TP2 would be down there. We already took out 82.8. Above 80.4 would break the 200 daily moving average, and retest of that would cause a new daily uptrend. Yeah, we'll have to look at if we even get back up to 80K, 80.4K. I know, actually, let's check Bitcoin too, because it's attempting to hold, but you guys see how we tapped the 618, but we're really not getting a nice reaction right now. I mean, it's a decent reaction, but it's not the greatest. So, like I said, I want this chop to start to keep forming in here until we actually hit the daily level. Just, if you guys don't have that, go into your chart, whatever exchange you're using, and go grab that daily level where the candle body closes red and opens green the next day, right there. Turn on your magnet, get your horizontal line, and just click it there. For me, it's 75.44. I'm just going to say 7.447. And then you can set an alert on it. Set an alert, and then just, you know, have that ready. And if you tap that and you start to get back above the golden pocket at 75.655, that's when you can look to enter the scalp long position. I did finally remove YLFI from my watch list, even though, yeah, I mean, unfortunately, man, a lot of those coins, they just keep dumping, right? Can we look at ARB? Yes, ARB. Ooh, not a good sign. We are falling back inside of our volume profile. So first off, let me pull this back to here. You can see we broke above the value area high. We had a nice 3-wave corrective move to back test the value area high. And then because it holds, you expect to take out this high. We did. We took out that high, but now we not only are breaking market structure bearishly by taking out that lower or that higher low, but we're falling back inside the volume profile. Now, if we extend the volume profile, we're back inside of it. We broke market structure bearishly by taking on the daily time frame by breaking this low, or by breaking this, this low, which was a higher low overall. Let me check something here. Wow. I was looking at this as a potential A, B, C, but you didn't even hit your minimum target, being that 618. You got pretty darn close to it, but you didn't hit it. So in other words, we could be looking at a larger corrective move in here that is potentially forming. What I would say is we have broken back within our major channel, right? This major, and I'm sorry for how disgusting this chart is, guys, but you can see pretty much from the all-time highs on Arbitrum, we've been in a major downtrend channel on the weekly time frame, right? Rejection, bounce, rejection, bounce. You know, you're kind of just chopping. And since that crash, we have been rejecting the midline. But we came down and we lost the channel. We formed a bit of a range underneath the bottom of the channel. And then we were able to break back in. So the fact that we've broken back inside this trend now, coming down to the bottom and bouncing from the bottom could give us new highs up to the midline. So we want to be watching that, and where's that bottom of the channel? It's where our POC of our range is. So essentially coming down to around 99 cents. Yeah, that's also going to be your 786 Fibonacci. We've already attempted to bounce from the golden pocket and it didn't work. If I throw on the golden pocket with that, you can see golden pocket didn't really work. And it's somewhat being flipped into resistance now. We can mark out just below the lows from Saturday, which is a weekend low. Just below Saturday's lows, we have a naked weekly point of control. Now, that actually is going to be important, even though it's before our major range point of control in our 786. That could give us at least a scalp long opportunity to take out the highs essentially from today. And then let's look at our naked dailies, because I bet you there's a naked daily down here. Actually, it's where, yeah. Okay, so we have some pretty strong volume support just below us, or just below the weekend lows. So first order of business for me personally, if we get an SFP from the weekend lows, so if we come down here, SFP that, hit into that naked weekly and naked daily and get back above it, I would potentially enter a scalp long on this. And I would look to take out, yeah, I mean, it would be the highs from today, but maybe even these highs in here. Seven to 1 risk to reward. We would have to play that very cautiously. I would only take it on the confirmed SFP. I set an alert on that. So if we get that opportunity, I'll let you guys know if I take it in the Telegram. The better support level to me, honestly, even though that's naked weekly and a naked daily there, The better support level is your 786 and your major range point of control at the bottom of the channel. The back test of that channel. Ugh, I mean, this would be a nightmare to count, but you could see you maybe have some 1-2s in a descending channel in here. And then you lose it, break it down. You get your 3s in here. That's your 3. You could be looking for a 4, 5, 4, 5, something like that to finish this impulse. And I don't know if that's going to end here or if it's going to end here. You did have daily bear divs on this thing, which makes sense why we're dumping so much. You can see higher highs, lower highs, even money flow bear divs here, money flow bear divs. On the opposite hand, though, very locally, now we are printing some bull divs on the daily time frame. 3 drives, 1, 2, 3 little humps. Money flow bottomed out. I would like to come actually a little bit lower to hit that naked weekly and that naked daily. Just thinking in terms of volume profile trading as well. We broke out of the range, back tested it, made new highs, but now that we're falling back in the range, you have a high likelihood of coming to POC. And with that POC being the re-entry and support of a major weekly channel, you really do not want to lose 99 cents. You want 99 to like 98 cents to hold. It's also kind of a key psychological level, right? And honestly, that would be nice for like a tap 1, tap 2. And if you come down here for a tap 3, that could be your accumulation. You broke market structure bullishly by breaking out of the range highs. You broke market structure bullishly, meaning you have a higher chance to make a higher low. And then this could be real expansion from here. So it could actually end up being a super nice swing long. I would want to see another major drive of bull divs on NAMI. Have you seen Hype? Yeah, I was looking at Hype earlier because Jason was talking about it in his live stream. What I was looking at, actually, I said yesterday I talked to you guys in the Telegram about Hype. I was looking at this being a potential corrective move here to come up and take out the highs. And I said, if we SFP this low into the bottom of the channel and then reclaim it, we're most likely going to take out the highs. Now, I didn't end up taking it because as it was happening in real time, we weren't getting the SFP and we didn't get it for 1, 2, 3 hours. We didn't get a low for 3 hours. So I didn't end up taking that. But unfortunately, this looks like a corrective move to take out your highs. Let's see. Did we actually take them out? Yeah, we did. We took out the highs of this move and now we're dumping. So I would expect to take out the lows, guys. We broke the golden pocket. I would expect to take out the lows and I would expect to come into this larger range POC. So 50, let's just say 57.8, 57.9. And if we pull a golden pocket from the last big lows at 54 up to now our highs, yeah, your golden pocket's right there. So 58 to 50, $58 to like 57.7-ish or 57.8-ish. We want to take out these lows from yesterday, which was a weekend low. Remember, it was a bank holiday, so I consider it a weekend low. Take out the weekend low into your golden pocket in your POC. You might be able to get a long opportunity from there. But you do have some pretty bad bear divs on this thing as well. You can see high, 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 lower highs, and here money flow crossing into the red. If we go to our 4-hour chart, yeah, pretty aggressive bear divs. Now, money flow doesn't look the worst, though. And you don't, yeah, very slight bear divs here. Also, very slight money flow bear divs here on the 4-hour, crossing into the red. And then let's go to our 8-hour. 8 hours, always good to look at money flow. You have 8-hour bear divs, 8-hour bear divs. Not looking the best here. If you don't hold that golden pocket at 58, unfortunately, I think you're going to come a lot lower. So let me hide this local TA. I can actually... Yeah, and honestly, guys, like from this low on May 13th, it's pretty clear. 1, 2, 3, 4, 5. Now, after a 5-wave impulse, what do you see in the most bullish scenario? You see a flat play out, and then you continue the uptrend. So honestly, it's actually kind of setting up nicely because we took out those highs today. We took out the 5th wave highs today. And what we want to be looking is for 58 to hold. If that $58 level does not hold, then this might not be a flat. We would have to maybe adjust the count. Actually, it's pretty hard to adjust that, though. This is a pretty clean 5-wave impulse here. 1, 2, 3, 4, 5 in here. Yeah, honestly, that $58 position, even though we see some pretty intermediate time frame bear divs, and I'm sure we're probably going to see daily time frame bear divs on NAMI, you really want 58 to hold. What I would say is impulse, this would have to be some sort of running flat here, and then another impulse. And you did have 5 waves in this. Remember, we just counted that. And so if we're looking at, oh man, unfortunately, guys, holy cow. Look at where we rejected. Right at the 1-to-1 target. This could be bad for hype. If you lose 58, this could have been an A, a running flat, and a B, and then you have your C in an impulse. We just counted 5 waves in that C. You're hitting directly into your 1-to-1 target with daily bear divs, 8-hour bear divs, 12-hour bear divs, ending on a high amount of volume. We really want hype to hold 58. Let's just say that. You really want it to. And like if you don't, you could really start breaking back down inside this prior range. You might even see a dump all the way to your golden pocket. And let's make sure that's on fib scale. Yeah, you could even take out these lows at $35. Hype has been pretty bullish though, and like the I think the platform has been making like $50 million in revenue a month. So that's really, really good. It's actually got a real use case and a pretty good like system. Let's just say you want 58 to hold. If 58 doesn't hold, you have a daily down here at 54, 54.5. Ugh, I don't even know if I would. Yeah, I don't know if I'd take that. Let's see if we have any naked dailies. Yeah, you do have a naked daily down there as well. So, here's the thing. If you don't hold $58, you could come down to 55 to about 54.5. But I wouldn't be looking for, I would be looking for a scalp long to make a lower high. Ooh, look at that. That's so nice. So last week's naked weekly point of control at $58. Guys, that is our key area to hold. Very key area to hold is that $58 mark. We have the SFP of Monday's lows. We have the golden pocket in there. And by the way, you're pulling the golden pocket of the impulse from the low of the impulse to the high of the impulse, not to this high, even though it was an SFP. You have your golden pocket there. You have a naked weekly point of control there. You have the SFP of the weekend lows into there. You have your range point of control in there, which is, you know, yeah, $58. I mean, it's like 57.86, 50, you know, down to 57.5-ish, but we want to see that. And actually, I'm going to set an alert here because this could be a very nice long opportunity. So long, GP bounce. We want to bounce from the golden pocket first. So I would want to see this. I would want to see, you know, the three-wave corrective move down, three-wave corrective move up. We want to see three-wave corrective move down, bounce from that area, and then start to reclaim. And that's when we could look to long on the reclaim of that low. Stop would go below the golden pocket, and at the very least, I would be targeting the highs. But honestly, it could start a whole nother impulse way, way higher. Now, on the daily time frame, let's say we start losing market structure on the daily time frame. Oh, let me just do this. You still have a more macro bullish scenario of this being a wave one, a wave two, an internal wave one, an internal wave two, and then you see the explosion up. And then in that case, you do not want to lose really the golden pocket at $45, $46. I would say golden pocket value area high of your previous range. So like 46 to 44. Okay, guys, I just saw the time. I have to get going. I'm sorry that I couldn't get to everything today. Thank you all so much for everything, your support and everything. Please hit the like button. And Mark Dutch, much love to you, man. So good to see you in here. I hope you missed Masturbation Monday and didn't want to wait for Wanking Wednesday. Oh my God, dude. Mark. Well, when in Italy, right? Or what do they say? When in Rome? Is Rome Italy? Mark, much love to you, man. Time Attack, thank you so much for being here. Coin Operated, much love to you. I'm sorry, I do have to get going, but Coin Operated, if you're here on Thursday or Friday, I'll look at assist for you. Or if you're in the Telegram, tag me in the Telegram and I'll get it. I'll take a look at it in you in the Telegram. So thank you guys so much for everything. Please hit the like button on your way out.